This conference will now be recorded.
Good morning, everyone. Thank you for joining us for this morning's DCAA compliance accounting system requirements and audit processing session. Featured speaker today is Mr. Joe Greger. Joe's the Senior Financial Liaison Advisor and Small Business Program Manager with Defense Contract Audit Agency and the Audit Liaison Division. Next slide, please. So before we get started, I'm going to introduce myself and review who the Procurement Technical Assistance Center is and what we do. I'm Anna Valet Fitzsimmons. I am the Program Director for the Monroe County Finger Lakes Procurement Technical Assistance Center. I also serve on the association's board of directors, and both Mercy Morrison, our procurement counselor, here running the slide deck for us today. Thanks, Mercy. We are both VA CBE certified counselors to help with that certification. Next slide, please. So a little bit about the Procurement Technical Assistance Center program. The program itself is funded through the Department of Defense and appropriated through Congress. Procurement Technical Assistance Centers serve as a resource for all businesses pursuing and performing under government contracts at no cost. Our host agency here for Monroe County Finger Lakes is the County Monroe Industrial Development Agency. And as I said, we work with all businesses. We work not just with the military and other government agencies. We also work with prime contractors to facilitate networking opportunities for small businesses and to assist with small business goals. And we work closely with our partner organizations such as the Small Business Association and others throughout the region, including the MEPs, Manufacturing Extension Partnerships, to help educate and bring information to you. We are one of 96 centers across the country in the territories. And so if you're not sure who your PTAC is, there will be contact information available. And just so you know as well, everybody's going to be getting a copy of the slide deck as well as a recording of this session. Next slide, please. So I like to group our services in three key areas. We provide training through workshops, webinars. We host networking events such as government to business matchmakers. And really the bulk of our work is in the one-on-one counseling arena. And that's where we sit down with you, typically the small business, and where we'll assess, assist, clarify, and guide you through the government contracting process. We want to make sure you're ready for government contracting, and not to worry if you're not. We work closely with our partner organizations that can get you up to speed. But we will do one-on-one assistance and walk you through registrations and certifications, you know, system for award management, all the federal, SBA federal certification programs. For those of you dealing with you know, Defense Logistics Agency and helping you through DIBS with ITAR or your DD 2345. We assist in all those areas. We help identify contracting opportunities through our bid match service and, you know, help clarify technical information and some spec standards that you may require assistance with. Next slide, please. So why supply to the government? I thought this would be a fun little slide. Basically, these are the numbers for the federal fiscal budget year for 2020. Everybody likes to quote, you know, the defense dollars spent, but there's so much more in selling. And this is just the federal government. We, again, assist on the state and municipal level and assisting you with that government marketing strategy and helping you submit responsive proposals. So there's 22 departments and agencies, and keep in mind within departments, it can be broken further down. You know, if we're talking Department of Defense, we're talking, you know, Army, Navy, Air Force, Marines, and so on. So, and some other special agencies. So there's a lot to do and to build, and we will help you with that strategy in terms of targeting who's buying what you're selling. Next slide, please. And I always like to review why small business and why is small business so important, because there are statutory goals established by the Small Business Administration and law, as well as some flow down requirements. So I just want to highlight those. You know, the law says 23% of prime contracts are to be set aside for small businesses. It's broken down further within that 23%. We can see that 5% goes to small disadvantaged businesses, such as 8As. Another 5 goes to the woman-owned or economically disadvantaged women-owned, 3% for the historically underutilized business zones, and 3% for service-disabled veterans. And pending on contract requirements, those may be flowed down from prime contractors as well. And they may have and will have an overall subcontracting plan where a certain percentage of those contracts have to go along these lines. So next slide, please. So why are you here? I thought this would be fun to cite the FAR. So Federal Acquisition Regulation 9.104-1 is something that everybody should read. I always tell small businesses, read this. This determines what a contracting officer is looking for when they're looking to do business with a small business. Is it something that they just pull out of thin air? So I want to highlight a few things that I've simplified in verbiage, but read the FAR, please. One of the key points in there is Section E, that stating that you have to have necessary organizational experience and importantly, accounting and operational control. So that's why you're here today, right? We're going to be talking about those accounting, Joe's going to be talking about those accounting controls and giving an overview. But a couple things for you, small business. Government can't save your business, right? They're going to be in business with somebody that is qualified, has all the necessary employees and has all the infrastructure in place in order to make sure that they're spending money, the taxpayer dollars, responsibly. So, we can help in a lot of the areas in terms of the registration, making sure that you look to see if you have any past performance. You don't necessarily have to have past performance in order to do business with the government. I mean, you can establish that in several different ways, whether it's in the commercial marketplace. But if you have done business with the government, you should know what your past performance is, if it does exist, in CPARs. So take a look, read the FAR. When you can't sleep at night, read the FAR. That's just one clause. Okay, Mercy, now I'm ready for the next slide. Thank you. So I want to highlight some upcoming events. Please save the date for October 3rd, 2022. Yes, it's a Monday. We're planning on a live event here in Rochester, New York, in conjunction with Congressman Joseph Morelli, who represents the 25th Congressional District. This will be our second annual DoD Forum and Matchmaker. Last year we had to go virtual, keeping our fingers crossed for this year that it stays live. We do have some other upcoming events you can find on our website at the link above that I have cited there. March 29th, the New York State Department of Health is having an opportunity showcase on how to do business with them. For those of you that are from Monroe County, you may have heard, but Monroe County now has instituted their own minority and women-owned business certification program for the purpose of, there's a backlog in New York State in those certifications. And they're expanding the percentage of contracts. They have expanded the percentage of contracts that are being let to minorities as well as women-owned businesses. So this is a great opportunity to learn more. You don't have to be from a business from Monroe County to get certified with the county. You can find more information on our website. Then on May 19th, we are hosting Air Force Research Labs, again, another live event. They'll be coming to Rochester to talk to businesses looking for specific capabilities, more information to follow. I would suggest that you look at their website, and this is Air Force Research Labs from Rome, New York. Take a look at their website, see what they do. I have more information as well that will be coming out probably, if not tomorrow, on Monday. And see if you have a good compatibility in terms of potential products or services. But the buzzword in the Department of Defense arena is innovation and technology. So everybody's looking for new innovative products and services. Small businesses can be nimble and they can fulfill a lot of different potential goals that they have. So take a look at that. And we will continue. We recently launched with the Small Business Administration our 30-minute government contracting info series, and we'll continue with that in June. Next slide, please. So if you want to receive services from the PTAC, we are required by the DoD to have you complete an application for free services. And if you're not sure who covers your region, which PTAC covers your territory, you can send me an email or you can click on the links provided below. Go to aptac-us.org or Google DLA Small Business PTAC. And you'll find a listing of all the PTACs. And in particular, there are also PTACs that cover the Native American BIA regions for Native American businesses, so we can connect you with them. There's an office in Syracuse, New York, actually, that covers our territory and a whole swath of the Northeast. But Crystal Pierce from the Syracuse area with the BIA PTAC would be able to assist you, and I can connect you. Next slide, please. So that's really it. I did plug in here last minute. I strongly suggest that if you're interested in doing business with the Department of Defense, you read these two brand new 2022 Defense Industrial Base reports with the links there to see what direction that the Department of Defense is headed in, what their goals are, what they're looking for. It's very interesting and can help guide you in any future projects that you're considering, or if you're looking to change your business trajectory, take a look there. But do we have any questions, Mercy?
No, I've replied to them all.
Okay, great. So thanks very much. So with that, and if you do have any questions afterwards, certainly, just send us an email. And next slide, I'm going to introduce our speaker, Mr. Joseph Greger. He is the Small Business Program Manager located at Defense Contract Agency, Audit Agency Headquarters in Fort Belvoir, Virginia. He serves as the Program Manager and Audit Expert for small business programs. And he has the responsibility to provide assistance, consultation, and internal control with regard to audit requirements in their application to small businesses. So Mr. Greger graduated from California University of Pennsylvania and with a Master of Science and a BA there, and a Bachelor's in Accounting. He began his career at DCAA as an auditor in the Herndon branch in Northern Virginia, and was promoted to supervisory auditor and then branch manager at the Springfield branch. So Joe has also served at headquarters as an OWD program manager in the operations directorate, and he lives in Alexandria, Virginia. So Joe, it's great to see you again. Thanks for coming.
Good morning.
Back and doing this.
Good morning, Anna. Thank you. Thank you. And you can hear me, right? Audio is working? Perfect. Perfect. Thank you. Good morning, everyone. It's a pleasure being here. I appreciate you attending this webinar. I've worked with Anna before in the past. Actually, before COVID, I traveled up there and we did some in-person events, and that was very fun. Unfortunately, right now with COVID, we're doing some of these webinars, and I'm really excited to be back working with Anna again. So hopefully, this is an informative presentation. I have several topics that we'll be going over. Before I do that, I would like to do an introduction and DCAA overview. So if we want to go to the next slide, please. So if you want to sort of understand where DCAA came from, it's important to kind of look back on our history. And so, prior to 1965, there was no DCAA. And the audit function was actually performed by the various services. So, depending on who your customer was, you might have been dealing with several different organizations from an audit perspective. So in 1964, the Secretary of Defense, Robert McNamara, decided that the function of contract audit could be performed more effectively and efficiently if it was done by a single audit organization. And so as a result, in 1965, DCAA was established. We have oversight of about 9,000 contractors. We average more than 3,400 audit reports, and we examine more than $350 billion of contract costs. So I think, for a medium-sized organization, we actually have a pretty large reach. So let's go to the next slide. And this slide is just our agency mission. As you can see, together with our acquisition partners, we increase warfighter capabilities by delivering high-quality audits and financial services to achieve fair and reasonable prices that protect taxpayer dollars, right? So I don't really need to remind you guys, but every federal contract is really a taxpayer-funded contract, and our role within the procurement oversight is very important, that we make sure we get the best bang for the buck, and that's kind of why we exist. So let's move to the next slide. This is sort of kind of organizationally, or I guess from a personnel perspective, we have about 4,600 employees. We're located all throughout the US and overseas. We have about 300 offices. I know we have an office up there in I think it's Buffalo. It's either Buffalo or Rochester, but we do have some offices up that way. But we have over 300 offices. Most of those offices are in the US, but we do have some overseas locations, one in Germany, and we also have one in Hawaii as well. Next slide, please. All right, and this slide here just shows where DCAA is placed within the overall DoD organization. We operate under the authority, direction, and control of the Undersecretary of Defense Comptroller. Our placement assures our independence from offices that have procurement responsibility, right? So every audit we perform, we must follow federal auditing standards, otherwise known as Generally Accepted Government Auditing Standards, or GAGAs for short. And one of the standards that we must follow is independence. So we have to be independent of not only the end user of our report, but also the auditee, and that's you guys, the small businesses, small and large actually. And again, this is very important because this provides transparency, objectivity, credibility with our audit findings. Okay, so let's move to the next slide, please. All right, this slide, this is just simply our organization here. Anna mentioned I'm part of operations, which is that left column. Technically, I'm under operations. We also have regions. DCAA organizes itself with 4 regions. Field detachment technically is not a region. It's really a group of auditors that audit classified contracts. So, if you're a small business and if you have a lot of classified work, you may be audited. Field detachment would be the group that audits you. And then DCAA decided it's been about 4 or 5 years, but we decided to organize around the really big defense contractors, like those top 5, 6, 7 contractors, as you can see, that right column there. We call this corporate audit directorates, or CAD for short. But again, as a small business, you don't really need to worry about that because you'll fall under one of our regions. And if we go to the next slide, we'll show you geographically where those regions fall. Okay, the gray area is eastern. The orange is central. So as you can see, pretty much all of upstate New York falls under the orange area. So if you're a small business located anywhere within that state, or I guess I should say that region of that state, then you would fall under central region. And then of course the green is western region. Okay, and then the CADs, as you can see on the map, are located throughout the country. I live in Northern Virginia, so I actually have the Northrop Grumman CAD, which is really close to where I live. So next slide, please. All right, and then this slide here, this shows our public website. We actually have a lot of resources on here, so I highly recommend you check this out whenever you can. www.dcaa.mil. I just got done mentioning the offices that we have and geographically where they fall. If you're interested in finding your specific office, you could use our public website here under the locator tab. You would just click US CONUS, and then if we go to the next slide, this slide here will show you where you can put in your search information, and then you would enter that in, and then your office would pop up. Okay. Again, if you're in New York, it's fairly easy. There's only a handful of offices there. But if you're not located in New York, if you're in another state and you want to know who your office was, you can always use this function here. Let's go to the next slide, please. All right, this slide here shows some of the DCA services that we can provide during the different phases of the contract. Again, as a small business, some of these are not really applicable. When we talk about the pre-award stage, however, the two audits that you will typically see will be the price proposal audit and also the pre-award accounting system audit. And I'll talk a little bit more about the accounting system in our next presentation. And Anna sort of touched upon that a little bit as well. As we move into the procurement process, if you are awarded the contract and you start executing on the contract, which is really the contract performance, this is where DCA performs really, I think, the bulk of its work. Okay, one of the most common audits we perform is what's called the incur cost audit. Okay, so if you're a small business and if you're awarded certain contract types, you may be required to submit what's called an incur cost proposal. So that's something you do every year, and that's an audit that we typically perform on an annual basis. So you may see that. You may see some other things such as maybe voucher reviews. You may see real-time evaluations, whether it's labor, whether it's materials. Okay. Now, as a small business, you are exempt from cost accounting standards. Okay, so DCA will never perform what's called a CAS compliance audit or perform a disclosure statement audit because you're exempt from those standards. Okay, and then at the end of the contract, DCA doesn't play a big role in that area, but we can assist the contracting officers, for example, performing a final voucher review, or sometimes contracts are terminated for whatever reason, and if it meets certain criteria, we can perform what's called a termination audit. Okay, let's move on to the next slide, please. All right, now I mentioned our public website. We have a lot of information there, including all of the presentation materials, right? So the two topics that I'll be going over today are actually included on our website. And as you can see, we have other topics as well. So again, highly recommend checking this out whenever you have time. I think there's a lot of great information here. So if we go to the next slide, this slide here shows additional resources that we have. We have guidance out there. For example, if you're interested in maybe looking at FAR 31205, the cost principles, if you're not sure about advertising costs, is that allowable, unallowable, things like that, then 31205 discusses that in great detail. Okay. We also have some checklists and tools. I mentioned the incur cost proposal. If for some reason or by chance you are actually developing your proposal right now, then we recommend you go to our public website and get the model, get the ICE model, right? Because that actually provides all the required schedules, and it provides a sort of a baseline of that you can use to actually prepare your proposal. So instead of starting from scratch, you can actually use something as a guide. We also have some frequently asked questions for contractors regarding COVID-19. I know in the past we've had questions concerning PPP, and how do we treat those costs specifically with incur cost proposals, right, et cetera, et cetera. So there might be some information there. Next slide, please. All right, and again, this is our public website. We actually have a new small business section now. This is actually a relatively new feature. So when you go to our website on the far right, you'll see a drop down for small business. There you'll see the resources that I mentioned, the presentations that I mentioned. We do have some frequently asked questions. So I think there's about a dozen or so maybe, just general frequently asked questions that might be interesting to you. Also, we have a small business seminars section there. So, like I mentioned before, I have worked with Anna before in the past. I work with many PTAC counselors across the country. About 95% of my workshops that I'm doing are virtual. So, and what I've done was I've listed all of my upcoming presentations on here. So if you're interested in ever attending one of those, if you see a topic that you might be interested in, feel free to go there, take a look at it, and if something piques your interest, I would highly recommend signing up and attending one of the training sessions. So I think that's a great feature. Next slide, please. This is just my contact information, and I believe you'll get a copy of this at the end, so there's really no need to write this down. And then the next slide is really the conclusion slide. It's really, yeah, if there's any questions or comments, I'll be happy to take those. If not, we can just transition over into the next topic.
No questions yet, Joe.
All right, no problem. So let's go ahead and move over into the accounting system requirements. Okay, and this is actually, you know, from my experience as a supervisor and manager, I would say for a lot of small businesses, this is really kind of your, for contractors, this is really their first experience with DCAA and with a DCAA audit is really the accounting system requirements. And this is really important because, well, number one, generally speaking, when you're sort of entering into federal contracting, depending on the contract type, these requirements will kick in, right? And so it's important to understand what these requirements are. And it's also important to understand how you need to tailor your system so it can meet these requirements so that you can, you know, have an adequate accounting system because, you know, like I said, most small businesses, your entry into government contracting is really with the accounting system requirements. So let's just move to the next slide. All right. You can go ahead and do one more. All right. And so what I do want to say with the accounting system requirements, I mentioned quickly, there are some triggers to that. Okay. So just because you're contracting with the government doesn't automatically trigger the accounting system requirements, right? So the first will be any cost reimbursable contract. Okay, so cost plus fixed fee, cost plus award fee. DoD also considers T&M contracts to be cost reimbursable. So if any of that applies, okay, then automatically the accounting system criteria will kick in, right? So that means, what that means is contractors must then ensure that their accounting system complies with this criteria. Okay, so that's number one. That's one of the triggers, any cost reimbursable contract. The other trigger is any fixed price contract that allows for progress payments. Okay, now it has to be specific to progress payments, or I should say, the fixed price contract must have the progress payment criteria within the contract. Okay, the progress payment basically says contractors can get reimbursed at cost when they meet certain timelines within their within their timeline, right? So, you know, let's say at 25% complete, 50% complete, et cetera, once you meet those, you can get paid at cost, okay? If the progress payment clause is in the fixed price contract, then that is a trigger for the requirement to meet these accounting system criteria, okay? So those are the two triggers. Outside of that, then you're not required. Then you don't have to maintain an accounting system consistent with these criteria. Okay, so just that's really the first thing to understand. Okay, I think the other thing I want to mention too is, you know, and this is a kind of a misconception, not only with contractors but also with a lot of the procurement, you know, people within the procurement community, is a lot of times, you know, I'll get an email or a phone call from a small business saying, hey, I want to be compliant with these criteria, and I'm asking DCAA to perform an audit. Well, unfortunately, we don't perform audits at the request of a contractor. So typically what happens is if the federal government has a need to make a procurement decision, and if that need is predicated on whether a contractor has an adequate system, then he or she can request an audit from DCAA. So the audit generally is initiated by some sort of federal entity. Okay. Now, once that happens, you know, obviously DCAA will perform the audit, and what we expect is, you know, the contractor, you know, has a system in place and is ready to show DCAA how that system works. and how it meets the criteria during the audit. And I'll discuss the audit process after this presentation, but I just wanted to mention that before we move forward. So let's just go to the next slide. Let's go one more, please. The SF 1408, there's really nothing there to show you. Really what that form is, it's a form that DCAA fills out. Okay, once we perform the audit, we fill out that form, indicating whether you meet the criteria or not. So it's really not irrelevant, I think, to you guys. But with that said, I will be going over all of the criteria in this presentation. Okay. Now, I will also say this, the first dozen slides are very theoretical in nature, very conceptual, and there's a reason for that, right? Because some of this stuff you got to understand the conceptual part of it, so that you can understand how you can implement that within your system. So the first criteria we'll talk about here is a very broad definition of an acceptable accounting system, and there's 4 broad areas here. Okay, so an acceptable accounting system must meet all applicable laws and regulations. Okay, the cost data must be reliable. The system must also mitigate and minimize the risk of mischarging. And then also the system must be designed in a way that invoices or billings can be reconciled to the cost data, right? The actual accounting data. And that's important because if you think about it, when a contractor submits an invoice or bill to the government, that's really the only thing that we see. Okay, before we pay you, the only thing that we really see is that invoice or bill. So there has to be some assurance that the amounts you're billing are consistent with the charges within your system, and also meet the terms and conditions of the contract. And I'll talk about that as we get on. So again, the first criteria, this is really it's kind of a broad overview of what is an acceptable accounting system. So let's move to the next slide. Okay, and here we'll talk about kind of the definition of an accounting system. Most people think it's Deltek or it's Uninet or CostPoint, right? It's that platform, that software that I purchased. And I would largely agree that is the case. However, I would also argue that your accounting system is just more, it's more than that, okay? It should also include policies and procedures. It should also include desk manuals. It should also include subsystems that you have, such as labor, billing, timesheets, those kinds of things, okay? And so really it's anything within your system that you use for accounting methods, procedures, to record data, classify data, summarize data, right? It's anything that you use for that purpose that should be defined as your accounting system, and not just any one thing. Okay, so it's really all those things in the aggregate. Next slide, please. All right. So, okay, total contract cost, and this is kind of where I mentioned a lot of the stuff is kind of theory related, kind of theory based. And the first is going to be the idea of total contract costs. And what we say here is the total cost of a contract is the sum of all of your direct and indirect costs that you can allocate to your contract. Now, why is this important, right? Well, first of all, federal contracting, government contracting is very different than financial accounting, okay? And so, I don't know your background. Some of you here might be CPAs, maybe you have a background in accounting. Myself, certainly, I do have an accounting degree, and I remember my classes in college. A lot of it was financial accounting, which is very different than government accounting, cost accounting, so on and so forth. And so when we kind of talk more in the line, kind of more within the government accounting, cost accounting, the idea of total contract costs is very important because we want your accounting system to be able to track and record all of your direct and indirect costs by contract, right? So that's really, really important, okay? If we go to the next slide, okay? Now, building upon total contract cost, right? It's important to also understand the system must be designed so that you can segregate your direct and your indirect costs, okay? Now, if you're not sure what that means, a direct cost is anything specifically identified for a contract or a job. An indirect cost, okay, is an expense that you incur, it's not really identified with a specific job, but it can be identified with maybe 2 or more jobs, or maybe even an indirect function. Okay, so that's broadly, that's the definition of direct versus indirect. Let's move to the next slide. And again, kind of building upon that, it's also important that, and I kind of mentioned this earlier, it's also important that your accounting system identifies costs by contract, right? So just to recap, we have, the system must segregate costs direct versus indirect, and also the system must be designed so that it can track costs and record costs by job, right? That's really important. Okay, let's go to the next slide. Just quickly about indirect cost. Like I said, like I mentioned before, indirect cost is anything not really identified with a single job, but identified with 2 or more jobs. Now, this second bullet here is important to understand, right? What it says here is an indirect cost is not to be allocated to a contract if other costs incurred for the same purpose in like circumstances have been included as a direct cost of that job. So what that second bullet means, it's, I know it's very legalese. This really actually comes right out of FAR. But what we're saying there in that second bullet is, I think the key term to look at is if costs incurred for the same purpose in like circumstances. So the idea here is if you incur an expense and you treat it as a direct cost, then in other situations, right, where you incur a similar cost for the same purpose in like circumstances, then you also want to treat it as a direct cost as well. Okay, let's say for example, you incur a similar expense and it's used for the same purpose in like circumstances, but you classify it as an indirect expense, then you have sort of inconsistency there in how you classify your costs, and that would be a violation of this principle, right? An example could be, let's say you have a support personnel and they're supporting, let's say, an engineering job, okay, and that labor is being treated as indirect. But then let's say that's support personnel performing very similar function, but they're supporting an aviation contract, okay, but they treat their labor as direct, right? So, really, if it's the same purpose, okay, the function of the position is the same, you should be treating it the same no matter what, right? And that's kind of the idea behind that theory, okay? Let's go ahead and move on to the next slide, please. Okay, now we're going to talk a little bit more in depth about indirect costs, okay? And so what DFARS says, basically it requires a logical and consistent method for the accumulation and allocation of indirect expenses. So essentially what we're saying here is, every contractor has a rate structure, okay? And the rate structure is going to be different based on your needs, based on how you operate. But what we're saying here is when you accumulate your indirect expenses, you must do so in a logical and consistent way, okay? And then allocate those expenses based on some sort of base, okay? Now, logical and consistent, right? What does that mean? I guess the example I like to use is the fringe pool, right? Most companies that I've spoken to, at least, have an idea of what a fringe pool is. They accumulate fringe costs. If you look at a fringe pool, the different elements within a fringe pool, I would argue, are logical and they're consistent, right? Typically, fringe type of expenses are accumulated because they have a sole purpose. The sole purpose behind most of those expenses are related to labor, right? They're related to, because it's a function of employees within your company. Okay, so like all of your state and local taxes, right? All of your paid time off for sick leave or annual leave, whatever classification you want to use, right? Bonuses, bereavement, all those things are related to personnel. They're related to labor. They're related to the function of having employees within a company. So that's kind of what this is talking about in terms of accumulating your indirect expenses in a logical and consistent way. Okay, let's go to the next slide, please. All right, and here we're just talking about a couple of things. You know, a company can have any number of indirect accounts within a pool, right? So that there's no criteria on that. You can have any number of accounts. I mentioned this just earlier. The rate structure needs to be tailored to your company and how it operates. So that's really important as well. Um, you know, I've gotten questions before in the past from small businesses. They'll ask, "Hey, you know, what kind of rate structure will DCAA approve?" Well, that's really not our call. And quite frankly, we don't care what rate structure you have as long as it's appropriate for your company and how you operate. That's really all that matters. Okay. Uh, However, for the purpose of this presentation, we'll just sort of talk broadly about two broad categories, which is overhead and G&A. Okay. So the next slide, we'll talk quickly about overhead. All right. And these are some examples of overhead pools. Okay. Typically within a services environment, we'll see what's called an on-site and or off-site overhead. Okay. If you are a manufacturing company or if you deal a lot with materials, then you may have material overhead, manufacturing overhead, engineering, et cetera, et cetera. Okay. Let's go to the next slide. Now, G&A, this is very specific because this is, and again, this comes right out of FAR. These are the management, financial, and other expenses related to the general management and administration of the company as a whole. Okay, so I like to think of these expenses as those expenses that you incur just because you have a company you have to run, right? And this is regardless of, right, you know, mutually exclusive of the fact that you have government contracts or that you have, you know, one contract or 20 contracts, right? These, you know, again, these are expenses you got to pay because you have to run a company. And as you can see, some examples would include, you know, the salary of your executive staff, those professional and consultant services like accounting and advertising, consulting, right? Those kinds of things. Selling and marketing expenses could be also be considered G&A. And obviously there's others as well, but those are just a few examples. Okay. Now, if we go to the next slide, okay, we'll talk about allocation base. So, you know, again, if you think about the rate, your indirect rate is just a function of your pool and your base. Okay, so I discussed the expense pool. Now we'll be talking about the allocation base. Okay, so it's really important to understand that the indirect costs or indirect costs should be allocated based on accrued, based on benefits accrued to your final cost objectives, otherwise known as your contracts. The allocation base must be reasonable, and then also there must be a relationship between the pool and the base. And I really think that that third bullet there is very important, especially when you're sort of determining what kind of allocation base do I want for my pools. Okay, and if we go back to the fringe example, all right, and we can use that, right, to kind of maybe drive the point home. When we say that there's a relationship between the pool and the base, I think of this as, does the base drive the pool? Okay, so if the answer to that is yes, then to me there's a relationship there. If the answer is no, then I think you need to consider maybe looking at a different base. Okay, so if we use the fringe example just from a few slides ago, you know, I mentioned, you know, the different types of fringe expenses. Okay, so what would drive those, right? You know, I said typically employees. So if you had more employees, if you hired, let's say 10 more employees, then generally all those expenses that we, you know, discussed in the pool will also increase. Okay, so to me, labor is a driver of the expenses in a fringe pool. So to me, there's a relationship there. Okay, so that kind of thought process really should be going on when you think about your allocation base for all of your indirect pools. Okay, let's go to the next slide. All right, and so again, these are some examples of allocation bases. Okay, specifically with G&A, these are the three that we normally see. Total cost input is by far the most common. This is all of your direct and indirect cost. okay, less the G&A expenses themselves. A value-added base, again, if you're really heavy into materials and subcontracting, you may have a value-added base, which is total cost less subcontracts and materials. And then finally, we have what's called a single element. Okay, so I've seen this actually, if you're really small, literally, you have one or two contracts, a few $100,000 maybe in your sales, it's probably perfectly okay to have direct labor dollars as your G&A base. Okay. Let's go to the next slide, please. Okay, allowability. So I do want to talk about this quickly here. A cost is allowable only when it complies with the following. Now, this is important because, why is this important, right? Because again, with cost type contracts, okay, contractors will be submitting invoices to the government to get paid. And so it's important to understand what is considered allowable, because only allowable expenses will be reimbursable. Okay, so again, the government will not pay for expenses that are not allowable. And so it's really important to understand this concept. So what FAR 31201 says is a cost is allowable only when it complies with the following. So first, it has to be reasonable. It has to be allocable. It also has to meet the terms of the contract. And finally, it has to meet any limitations set forth in the entire 31.2 subpart. Okay. Now, again, I'm sure you've noticed I skipped over CAS. I mentioned this earlier. Small businesses are not required to follow cost accounting standards, so I didn't mention that there. But those other four items, obviously that you'd be required to follow those. So if we go to the next slide, I'll talk a little bit about reasonableness. Now, what is reasonableness? Well, if you look at FAR basically says in its nature and amount, it does not exceed that which would be incurred by a prudent person in the conduct of competitive business. Okay, so essentially, what would a prudent person pay for? What would they typically pay for in normal course of business is kind of what they're saying. The other aspect to this is the contractor is responsible, right, or the contractor has the responsibility to establish that a cost is reasonable. And this is important for a number of reasons. Number one, every contract will be different and every circumstance will be different. So quite honestly, there could be a situation where, let's say, contractor A incurs an expense, but contractor B, operating under different circumstances, may incur the same expense, the same amount, but it may be considered unreasonable, right? So that's why it's important that FAR has the contractor is responsible for establishing that, because it would be unreasonable and quite frankly be impossible for the government to sort of establish all scenarios in which a cost would be unreasonable, right? I mean, it's just something that we couldn't do. So that's why it's important that contractors do this. And so to give you an example, I had a small business tell me once that when they traveled, so they had a contract and the contractor required them to travel to a specific location, and this location was not accessible by a standard, vehicle, right? So most of you, when you travel, when you get to your destination, you rent a car, a standard four-door sedan, and most people would say that's reasonable, and I would agree with that. In this particular case, the small business rented a helicopter because that was the only way to access this part of the country, and so that expense, I would argue, the contractor had the ability to establish reasonableness because the contractor required the contractor to perform something that was sort of outside of the norm. Okay, so in that example, I think the contractor could establish reasonableness, right? So I think that's important to understand because not all situations are the same. All right, let's move on and we'll talk about allocability. I think this is pretty straightforward. Essentially, what we're saying here is a cost is considered allocable if it is incurred specifically for the contract, Okay, and as you know, that's a definition of a direct cost. A cost is allocable if it benefits two or more contracts, right? And can be allocated based on a reasonable proportion to the benefits received. Okay, so that's technically the definition of an overhead expense. Okay, and then finally, a cost is allocable if it is necessary to the overall operation of the business, right? Although a direct relationship to any particular job cannot be shown. That is a definition of a G&A expense. So what we're saying here is if your accounting system can properly segregate direct costs and indirect costs, and within indirect costs, if you can allocate them as an overhead expense or a G&A expense, then we would consider that cost to be allocable. Okay, let's go to the next slide. And this is the contract terms. This is actually very important because not only contractors need to follow the FAR and the DFARs, but also contracts will have specific terms and conditions within each contract. So you have to understand. So first, you have to sort of brief your contract, read the contract, understand what's in it, and then make sure you're compliant with those specific terms and conditions. Okay. So as an example, okay, if you look at FAR and DFARs, you're not going to find anywhere where it discusses overtime. Okay. But I have seen in the past, as an auditor, supervisor, I've seen many contracts. Well, maybe not many, but I have seen my share of contracts where it specifically says overtime is not allowed. Okay. And so if you didn't know that, if you didn't know your specific contract had that criteria, then it'd be very difficult to be compliant with that, right? So again, it's very important to understand your contract, to read your contract, and know what those terms and conditions are. Okay, let's go to the next slide, please. Let's go one more. All right, now we're sort of out of kind of the theory part. And so from this point going forward, it's mostly straightforward, pretty easy requirements. So here we have four requirements here. You must have a general ledger, right? That's pretty straightforward. I don't know if I've ever seen an accounting system not have a general ledger. You must have a process in place where you can reconcile your job ledger to your general ledger. You must have a process in place where the approval, you can document adjusting journal entries and also the approval of those journal entries. And then at least monthly, you want to post your transactions to your ledger, right? At least monthly, that's the floor, okay? Quite honestly, most businesses that I've seen do it much more regularly than that. But the criteria is monthly, okay? Let's move to the next slide, please. Okay, labor system. So I think this is pretty important, really for any company, whether you're services based, whether you're or any other industry. And so what DFAR says here is number one, you must have a timekeeping system that identifies your employees' labor by job and also by indirect function. Okay. And then a labor distribution system that charges direct and indirect labor to the appropriate job, right? So those are the two very broad requirements for labor. Let's go to the next slide, please. Okay, now these are some things you want to think about. Now, the labor, right? I kind of mentioned labor must be charged to your job or some other indirect function, and it needs to be on some sort of timekeeping document. Okay, so that document can be either paper or electronic. All right, a lot of people are kind of confused by that because I know most systems nowadays are electronic, but it's okay to have paper if you choose, if that's what you choose, right? The only thing with paper though is there's some controls you must include with paper, such as ensuring that any changes to paper timesheets are approved and signed off by the supervisor. And then also you want to make sure that employees do not have access to the actual paper timesheet, meaning they can't just create their own paper timesheet whenever they want, right? Again, some of those controls are already built into the electronic versions, but with paper, certainly you can do it, but you kind of want to think about some of those other things. And then finally, you want to make sure timesheets are completed and certified by the employee and approved by the employee supervisor, right? Also, employees should fill out their timesheets on a daily basis and include all hours worked, including uncompensated overtime, right? So just a few things to keep in mind. All right, let's go to the next slide, please. Okay, unallowable costs. I think this is, again, pretty straightforward. DFARS basically says, contractors must have policies and procedures in place to identify and exclude unallowable costs, right? Pretty straightforward. I don't really talk about it a whole lot, but most accounting systems have what's called a chart of accounts, right? And so most of you out there are probably aware of that. So in my opinion, and based on what I've seen, the chart of accounts is essentially how contractors plan to identify and segregate and record and accumulate their expenses. And so with the unallowables, typically what I see is the 9 series accounts is what a lot of businesses use. But again, that's not set in stone. You can kind of set it up however you want. But what I typically see is the 9 series. All right, let's move on to the next slide, please. Okay, cost by contract line item. Essentially what we're saying here is the accounting system must be designed to be able to record costs at a lower level of detail if required by the contract. And typically what you'll see is some contracts may have different funding lines within the contract. And this is all really generated by how the contract is funded. So sometimes you may see task orders, you may see contract line items, and it may require you to track costs at a much greater detail than otherwise you would have, right? Because, and as an example, you might have CLINs 1, 2, and 3, and each CLIN is funded separately, right? And each CLIN is also a different cost element, right? So the accounting system must be designed to be able to track costs by cost element and also by contract, but also by CLIN, right? So that's just one example. But again, I don't generally see this as an issue, especially if you set up your chart of accounts appropriately. So really, it all kind of stems back to how, setting it up using the chart of accounts. Okay, let's move on. Next slide, please. So for billings, again, this is pretty straightforward. Billings, the amounts on the bill must reconcile to your accounting system. That's really what we're saying here. But if we go to the next slide, we do have a few exceptions here, right? So as you know, contractors can only bill costs that have been recorded and have been paid, right? So that's the general criteria. The exception to that would be is if contractors can show that they have vendor costs, that they have subcontract costs that they pay, and you pay them timely, and you also pay them in accordance with the agreement, then you can also include those costs on your invoice as well, right? So technically, you haven't paid for those costs, but we realize cash flow is a challenge with a lot of small businesses, so that's why we've allowed you to include those costs, provided that you can show that you're responsible and you're paying them timely, and also within the terms and conditions of the agreement. Okay. Next slide, please. All right. The other thing to know about your invoice and bill is you want to make sure that the amounts not only reconcile to your accounting system, but also they are in compliance with contract terms, right? So I mentioned earlier, it's important to brief your contract, understand what those terms are, because when you invoice the government, you want to make sure that the amounts are also in compliance with those contract terms and conditions, but also they're within any restrictions or special withholds, right? A lot of times contracts might have things like, let's say a 25% withhold fee. Okay, so what that basically means is you can't bill the entire fee on an invoice. You can only bill up to 75% of it, right? So that's one example. There's funding limitations. Every contract has funding limitations, so you have to make sure you're within those, right? So there's all kinds of things that a contract will have, in terms of conditions. You have to make sure you know what those are, and you have to make sure that your invoice is compliant with all those things, right? Let's go to the next slide, please. And here we'll talk about a couple of things, limitation of cost and limitation of funds. I briefly touched upon this, but basically what those FAR regulations say is the contractor is responsible for monitoring your funding limitation and your cost ceilings. And when you reach about 75% of that, you must reach out to the contracting officer and request an increase. That's really what that's saying, okay? If you don't do that and you exceed the funding limitation, then there's no guarantee that the government would pay you the amounts that are above and beyond the funding limitation, okay? Contractors should also monitor their indirect rates, and at least monthly, assign an employee to be responsible for monitoring contract expenditures against limitations on price or cost, right? So really the only way you can be compliant with this is just to have somebody within the company to monitor all of this, right? Next slide, please. All right, let's go one more. And I think we're getting near the end here. This is really the last criteria. And what this says is that, contractor management should perform internal reviews to ensure that your system complies with your established policies and procedures and accounting practices, right? So it's really a good idea to have periodic sort of internal audits, right? Internal checks to make sure your company is operating properly and within all the regulations, okay? Let's go move to the next slide. I think we're at the end here. We can move on to the next slide. I know time is of essence here. Let's go ahead and move on. I think we have a couple of FAQs I kind of want to get to. I think these are really important. I've sort of added these this year. So how do I get a DCAA approved government accounting system? So unfortunately you can't. Well, I guess I should clarify, you can't because there's no such thing as a DCAA approved government accounting system. And that's kind of one of the big misnomers that I've seen just over my time as the small business program manager. DCAA, we don't make up the rules. This isn't a DCAA approved thing. The regulations really come from FAR and DFARS. Our role is just to make sure you're following those regulations. That's really what it is. Let's go to the next FAQ. All right, how do I request an audit? I think I mentioned this earlier, but contractors can't request an audit. Basically, DCAA performs audits that are requested by some sort of federal entity, right? And typically, a federal entity should have a need for the audit because they're making some sort of procurement decision. But what I do tell small businesses is, there's no problem with you reaching out to the contracting officer and saying, hey, can you request an audit? I've actually had that just a few days ago. I got a call from a small business and they were explaining their situation. And it turns out that the contracting officer didn't really quite understand his or her responsibility. And so sometimes it's okay to sort of maybe nudge or suggest to the contracting officer, hey, as part of your duties, you can't ask DCAA for an audit. So let's go ahead and move to the next slide. Is QuickBooks or any other accounting software acceptable? So essentially, DCAA doesn't necessarily care what system you use. We don't recommend any system. But really, bottom line is, an accounting system is really just a software package. And really what we're looking for, and I kind of mentioned this earlier, what we're really looking for is really all of the systems and controls you have in place that includes your accounting methods, procedures, and controls. That's really the foundation of having an adequate accounting system. So it's not just the system itself, but it's everything in its totality that we're looking for, okay? let's go to the next slide. I think this might be our last one. Oh, no, that was the last question. So, yeah, so I'm at the end of the presentation. If there's any questions or comments, I would be happy to take those now. If not, I can move on.
Doesn't look like there are any current questions unless anybody has one right now. Nope.
All righty, no problem. So I think I have one more presentation to go, the audit process. So again, I sort of developed this presentation about a year and a half, 2 years ago, and I thought it would be good to sort of give or provide contractors with sort of an overview of what to expect during a DCAA audit. So during this presentation, I'll discuss what you see here. I'll talk about adequacy reviews. Communication is really key. I think really with any audit, communication is really, really important. So we'll talk about that. We'll talk about site visits and also requests for information. So we can go to the next slide, please. All right. So with any audit, and again, you know, I'm talking very broadly here, right? Every audit will be slightly different. You know, there are different audits we perform. Every office is going to be different. Every auditor will be slightly different in how they conduct an audit. But in general, you know, these are sort of the core components of an audit. You should expect to see these really in every audit, okay? And so when we talk about an audit, really the first step in the audit is to perform what's called an adequacy review, okay? And so the adequacy review really starts with evaluating a contractor's assertion, okay? And a contractor's assertion could be any number of things, right? Typically, it's going to be generally what you certify to, okay? So for example, if you submit, you know, I mentioned incur cost proposals, right? So contractors have to certify those. So the actual incur cost proposal itself would be your assertion. Okay, so that's one example. Another example could be your cost proposal. Okay, so if it meets certain thresholds, you have to certify that you have adequate cost of pricing data. And so if we perform an audit, the cost proposal itself would be your assertion, right? So those are some examples, but typically any audit really starts with evaluating the assertion for adequacy, okay? Let's go to the next slide. Now, once we perform the adequacy review, every audit will have what's called an entrance conference. And again, you know, I mentioned our auditing standards. This is actually part of our auditing standards, is that we must have an entrance conference with the contractor. And generally, you know, this is held with the contractor's representative. Typically, we perform these on site. You know, we go to the contractor's location. And the main objective of this is really to explain the purpose of the audit. We provide an overall plan for its performance. You know, we'll discuss things like anticipated due dates, the duration. We'll talk about the types of supporting documentation that we may ask for, okay, and other data which would be pertinent to the auditor during that audit, okay? And that's really the big value there with the entrance conference. Right, let's go to the next slide, please. All right, let's go and move one more. Let's go one more. Yeah, these are all sort of, you know, things that you can take a look at with the entrance conference. Now, I kind of want to get to the walkthrough. So the walkthrough, again, every audit's different. Some audits, the entrance conference and the walkthrough are really the same meeting. Some of the audits that are larger, more complex, generally will have a separate entrance conference and then a separate walkthrough. And so what the walkthrough is, typically the walkthrough is going to be the audit team will sit with the contractor and really go through the details of the assertion itself. Okay, so if we're talking about, let's say, your incur cost proposal, the walkthrough may consist of the auditor talking with the contractor about the various details of their incur cost submission, right? So there, you know, generally we may have questions, we may have findings like, hey, I saw this on Schedule A and this on Schedule B, they don't tie, they don't reconcile, can you provide an explanation, right? So those kinds of things, and generally it's going to be all associated with the actual assertion itself, okay? Let's go to the next slide. Okay, notification letter, and again, this is a requirement of our auditing standards. This is really just a summary of what we discussed in the interest conference, right? So the notification letter itself will include information such as the audit itself, was it requested, was it planned, you know, the assignment number, the objectives, the criteria and the scope, okay, our auditor's responsibility, and things like that, right? So again, this is a requirement of our auditing standards, and really this is just a summary of what we discussed in the interest conference. Okay, let's move to the next slide, please. Okay, interim discussions, and this is really important to understand because throughout the audit team or the auditor will discuss matters with the contractor and request additional support as necessary. Okay, the discussions will often disclose to the contractor any factual matters noted in the contractor's assertion records or supporting data. So this is really the interim discussion. Really, you'll see this during what's called the field work, right? The field work is the term we use, you know, when we're sort of in kind of the meat of actually performing the audit. Okay, next slide, please. Okay, exit conference. So, you know, once we performed the field work, at the end of the audit, we'll have what's called an exit conference. Again, this is required by our standards. Okay, and so what it says here is upon completion of the field work, the auditor will hold an exit conference with the contractor and discuss the audit results and obtain the contractor's views concerning the findings, conclusions, and recommendations. Now, again, you know, the slide before this, I mentioned continuous communication. You know, at this point during the exit, in no way the contractor should be hearing things for the first time, because during the audit as we move along, we should be disclosing findings to the contractor. Okay, so, you know, hopefully, you know, I don't want to scare anybody, or I don't want to sort of characterize our process, but really every audit, you know, we should have communication during the audit, and then once we have the exit, all of this sort of information, it really shouldn't be new. Okay, let's go to the next slide, please. All right, so again, with exit conferences, again, every audit's different. Some of the audits, you know, because if they're, you know, I'll give you an example. So on some of the higher profile proposal audits, there might be situations where we invite the contracting officer to attend the exit conference. In other situations, it'll just be the audit team and the contractor. And quite frankly, with some of the audits, you know, if there's no findings, if it's a very, very, very simple audit, sometimes it's just an email or a phone call. All right, I've had those as well. Let's go to the next slide, please. Okay, now audit opinions. Now, I don't know how familiar you are with this, but our audit does provide what's called an opinion. Okay, the audit opinion is then used by you know, those individuals within the procurement community because they're making procurement decisions. So there are 4 audit opinions. The first is unqualified. This is largely the best opinion any contractor would hope for. This is basically saying there are no findings and everything's fine. Okay, really there's no reportable findings is really what I should say. Okay. The other term you might hear for that is it's a clean report, right? That's kind of the nomenclature that you might hear. Okay, now in a qualified opinion, basically a qualified opinion says we didn't find anything or everything was okay except for these specific things. So maybe we found, you know, the contractor for whatever reason included alcohol expense in their proposal. Okay. And so everything else besides that was okay, except for the alcohol expense. So that would be an example of a qualified opinion. Okay, adverse, right? This is getting a little bit more severe, right? So the audit opinions kind of go from, you know, totally okay to, and it kind of gradually goes, and it's a little bit more severe. So adverse, basically the contractor's proposed amounts do not comply with the solicitation terms related to pricing. So here in this audit opinion, what we're saying is, you know, we performed an audit and we found significant instances where, you know, costs do not comply with the solicitation terms, or we found significant deficiencies. That's what an adverse opinion basically means. Let's go to the next slide. And this is the last opinion, and by far this is the worst. This is what's called a disclaimer. And this essentially, we're saying we have no opinion, okay? Because what we're saying here is the auditor does not express an opinion because the auditor has not performed an audit sufficient in scope to enable him or her to form an opinion. So essentially, if the auditor can't perform their duties, then they can't render an opinion. That's what we're saying here. One example, just to maybe highlight this, one example that I could discuss is, and this actually happened, I was a supervisor, and this was a number of years ago. A contractor was using one of these storage facilities to house all of their records. Okay, and so what happened was this company, I think there was a fire. It was either a fire or a flooding. It was one of those. But essentially, a lot of the contractor's records were destroyed due to this natural disaster. Okay, and so in this situation, you know, the audit team, my audit team, we were unable to review documents, supporting documents, to justify if these costs were allowable. And so in that situation, we issued what's called a disclaimer because essentially we couldn't give an opinion, right? So that's one example of where you could see potentially a disclaimer. Okay, let's go to the next slide. Site visits, you know, this may not be too applicable now, but pre-COVID, you know, obviously DCAA, you know, we would actually discuss beforehand coordinating going out to the contractor's physical site to perform our audit. Nowadays, I know with COVID, it's probably a little bit different. I know DCAA in general has been doing a lot virtually. And so going forward, we may see some of that in conjunction with site visits. I'm not sure, but I won't really talk about this too much. We can move to the next slide. And I think so request for information. So essentially what this says is during the audit, you can expect DCAA to request information. And so a couple of expectations that we have with contractors is that you provide the information when possible, or you provide it electronically when possible. Okay, we do ask that you provide the information timely. If you're not sure what we're asking for, we do ask that you ask for clarification, and also provide support in an organized fashion. All right, so this is really important. I will say in some instances when there are delays in the audit, typically those delays are due to, you know, when contractors sort of dragging their feet in providing data, or they provide us information that they think we're asking for, but it turns out we're asking for something else, right? So it's just really making sure we have good communication back and forth, and that's really both sides. Next slide, please. All right, so we do have some frequently asked questions here. What triggers a DCAA audit? This is actually a very common question, and so there, you know, there's really no one answer to this, right? Basically, the trigger is really it's really by a contracting officer or administrative contracting officer's need for an audit service, right, to make procurement decisions. And that's really what it comes down to. In other situations, there are audit requirements built into the contract. So like, for example, with the incur cost, you'll have the audit, you'll have the allowable cost of payment clause. So that's sort of built in, and that will trigger a DCAA audit. So there's really could be a number of things, but you know, to me, it really comes down to you know, is there an audit clause or is there a need from a federal organization? Next slide, please. How do I request an audit? I think I touched upon this before, but unfortunately, you can't. You know, DCAA does not, you know, respond to contractor requests. But again, like I said before, if you're in a situation where the contracting officer, you know, should be reaching out to DCAA, you could always, you know, suggest to the CO that they do that. Next slide. I think I have one more. How long does an audit take? So this is actually a good question. You know, but every audit really has their own unique timeline, and there's really many factors that go into this. Each auditor will perform a risk assessment to determine the scope of the audit, and then the time length and duration would depend on many factors such as risk, materiality, and also I mentioned the willingness of the contractor to support the audit. And like I said before, a lot of times we see, you know, issues where contractors are not providing data timely, and that really drags out an audit as well. All right. And the next slide, I think that's the last question. Yeah, that's the last question. So, or I should say last frequently asked question. So.
Excellent. Well, now we do have some questions from.
Perfect.
Here. So I think the last FAQ may have answered this one quite a bit, but how many years of prior government work does an audit cover?
How many years of, well, so an audit typically, like I said before, an audit really covers the assertion. And so generally the assertion, if we're looking at an incurred cost, is really just 1 year, right? So if we perform an audit, it's really going to be, it's going to be that 1 year, whatever year for that incurred cost will be, right? So it'll be for that. That's one example. If we're looking at proposals, a cost proposal, we're really looking at your cost estimates, right? So I mean, we're not really, again, it's very different than financial accounting, right? Financial accounting and government accounting are really two different things. So government accounting is really looking at your assertion, and so and that can vary.
Okay. Next question. As a single member LLC, I don't really pay myself. I take a draw from profits. If I'm working as direct labor on a contract, do I have to pay myself a salary? What if I go through a dry spell and don't have enough revenue to cover that salary?
Well, I mean, I really can't respond to so the question is, if you go through a dry spell, the question is, do I have to pay myself? Is that really the question?
Yeah, exactly. Or I'm assuming it's how is it going to look in an audit if I don't, so forth.
Yeah. So I mean, I got to be honest with you, that doesn't really have a bearing on our audit, right? I mean, that isn't something that we're actually looking for in one of our audits. I mean, from a personal perspective, you know, we want all contractors to be able to have, you know, really the benefit for the government is to have contractors that could perform adequately and have the cash flow to be able to pay their employees. But, you know, we understand things happen. But, you know, again, from an audit perspective, that is something we don't look for. So I wouldn't worry about that.
Okay. Another question. I work for a small business that was acquired by a large business, and our accounts for the small business have been closed. Does the audit cover only the new books for the large business or the small business that no longer exists? And I think they're asking because they're saying some of the government projects were transferred over by through innovation to the larger business.
Right. So again, it's going to depend on the type of audit that we're performing. If it's an incurred cost audit, and if that incurred cost covers some of the activity, you know, when you were a small business, then yes, we would ask the new company now, right? Because they bought you out. We would ask them for the records and all supporting documentation from when you were a small business. So yes, I mean, so that information would be relevant to our audit. Again, every audit's going to be different. If we're looking at, let's say, an accounting system audit or an internal control audit, then we wouldn't necessarily look at, right, information that was relevant at the time for the small business, because that parent company now, right, has taken over. So again, it just kind of depends on the audit type.
We have one more question. During or after the audit, does the contractor have opportunity to correct issues? Say you're missing a required written policy, can the contractor fix that? Or is it more of a pass-fail?
No, yeah. So again, the goal of the audit really is to identify issues, right? And we want the contractor to be able to make corrections. So for an example, if we are performing, let's say, pre-award accounting system audit, and we find that you have, let's say, your policies and procedures are deficient, and they don't address, let's say that they don't address 1, 2, and 3. Well, obviously, we're going to tell you that during the audit. In some cases, you may have the opportunity to address that real time. In other situations, we may issue the audit report with those findings, and then you would have an opportunity to make those corrections, and then DCAA would come in 6 months down the road to review those corrections. But yes, in every case, the contractor will have an opportunity to provide more data, provide an explanation, make corrections, et cetera, et cetera.
So they're not going to just automatically lose their contract, which I think is the fear.
No. I mean,
It's not a gotcha moment. It's a let's correct it, right?
Absolutely, yeah. Because I mean, let's be honest. The government doesn't want to, right? I mean, you're providing a very essential service to DoD and to other federal agencies. It's not in our interest for you to lose these contracts. We want you to be, that's not the case. So it's not a gotcha moment. We want contractors to be, compliant, and we understand, right? Companies make mistakes. So if you find things, yes, we do give you opportunities to make corrections. Absolutely.
Fantastic. And any other questions? Okay, I think that's about it for us, Joe. Thank you so much for joining us. Hopefully next time we can see you live again here in Rochester. We really appreciate all the information that you've provided. And just to reiterate, everyone's going to get a copy of the presentations as well as a copy of the recording. And anything else you'd like to say, Joe, before we close it out?
No, other than just, I appreciate you having me, and I always look forward to talking to small businesses and providing information. And as soon as you decide to have in-person events, I'll certainly make myself available to come up your way, Anna. It'd be great to see you again.
Excellent. Look forward
All
to
right.
it.
Yeah.
All right. Well, thank you everyone for joining us, and that concludes our session. Bye now.
All right. Thank you. Bye.